Okay, awesome. And we are live, we are recording. So guys, it's Aslam Du Toit, and you're either watching this video on my YouTube channel or you're checking it out on the 9 to 5 Millionaire page. And as you know, we try to bring you a lot of content, valuable content, so that you can learn, find different ways of utilizing your money, find different ways of earning an online income, or just finding a way to basically supplement your existing income if you are working a job. And today I'm sitting with Igor Marinkovic, all the way from Serbia, but now living in South Africa. And I got Igor's details from a very good friend of mine, Slaven. I want to give Slaven some credit. I know he'll be watching this video and he's going to be very upset if I don't mention his name. So Slaven gave me Igor's details and he told me this is a brilliant guy. He, he's been trading Forex for such a long time. But when I got to speak to Igor a few days ago, I also found that he's not just, an investor or a trader in Forex. He's basically traded the share market, the stock market. He's traded Forex. He's a property investor. He's got a portfolio running. And recently, he also started trading cryptocurrency. So with that, I mean, he's got so many of the things that I've already covered in some previous interviews. I think this is going to be an amazing interview because Igor has years of experience. He's been trading since about 2002. So I'd like to get into his story. And, if you're watching this, just drop a comment below. Let us know, if you get value from it. And if you watch it on the replay, just click #replay. Igor, how are you doing today?
Excellent. It's weather is not that cold anymore, so enjoying Pretoria's winter.
Yes. Awesome.
A friend of mine, father said once, the best summer that I ever had is winter in Pretoria, so nice, warm, 24 degrees right now. So
wow, 24 degrees. Normally I tell my friends that if I want to have a warm winter, I normally go to Durban because Durban has such wonderful weather in winter. But at least in Pretoria, you don't get all the humidity that you get in Durban.
Correct.
Awesome. So Igor, I think just to kick off, maybe let's start with your story. I know you come from, Europe. You come from Serbia. And what touched me a few days ago when we had our initial chat was we spoke about this whole, and whenever you're watching this video, whenever you find it, right now in the world, we're sitting in July 2020. And we're all on lockdown. It's, we're all affected by coronavirus. And I mentioned to Igor that this is like a once in a lifetime sort of thing. And he said, actually, this is more like my second or third in a lifetime sort of experience. And he started speaking about, the war that he basically, that he was exposed to years ago, out in, I think that's Eastern Europe, if I'm correct?
Yes, correct. And ex-Yugoslavia.
Ex-Yugoslavia. Maybe tell us about that. Tell us what that was like and what eventually brought you to South Africa, how you ended up here.
Sure. Okay, but let's start. My background profession, I'm electronic engineer, and that I'm still busy doing. I'm working on the designing of integrated circuits. I work as a consultant for the company and so and so. So basically in 2000, I came to South Africa. Before that, I experienced quite a few big once in a lifetime things. So it was in 92, it was one of the highest inflation in the world in the country where I lived. That's ex-Yugoslavia. It was millions of percents, whatever. I can't even recall those numbers anymore. So all that from about 91 to about 2000, it was the war very close to border of Serbia. So ex-Yugoslavia was big country, 25 million people. And then when the communism fell, the Berlin Wall fell, people start splitting those countries. So some countries get involved in the very bloody civil war. And it was from 91 to about 2000. And in about 99, NATO bombarded my country, Serbia, where basically they dropped the bombs. You were sitting there. I was in that stage, just finished university. 2 years, 1997, I finished university. So you sit there and waiting for, you don't even see who is throwing the bomb. They throw the bombs from a few thousand kilometers, a few hundred kilometers away. Wow. And you wait for your bomb with your name to come. I lost some good friends. I lost some school friends. Lots of people got killed. And yes, and then in 2000, I was looking to find the job overseas, obviously, and the company where I came to South Africa went through provisional liquidation, and they were looking for new engineers. So in 2000, I came to South Africa working as a basically electronic engineer. And we were working in that open office kind of space, and colleague like a 2-3 cubicles away was from time to time on the phone chatting, talking with the brokers. So it was not, online trading was not that big in that stage. That's 20 years ago. So I overheard some conversation, and me coming from communist country, having no, clue what is stock market or what property investing is, or, you were basically taught, as many other people, to go to school, finish university, find a job, and kind of retire in that job. Especially in communism, everything belongs to the government. So basically, working as an engineer, you basically work for government.
Right.
From there on, I knock on his door and on the door of his cubicle, and then we start talking, and he introduced me to a few things, gave me a few books, and I start reading. That was probably early 2002. And from there on, I start reading. Internet was, you couldn't find so many information then like you can find. No social networks, no Facebook, no charts. You had to buy charting software, you had to buy data for the charting software, and so on and so on. So I start making slow steps. Obviously, when you start, you don't have enough capital, so you try to scrape some money to try to try something, to do something. So in that stage, very popular were warrants. So there was the guy called Simon Brown, who is now TV presenter, and you can find him on MoneyWeb and on Business Day TV and so and so. So he had a course about SA warrants, or about warrants. It's called basically, warrants are just a version of an option that is published by the bank. But what was interesting for me was that there is a gearing there, so leverage. So you could put 1,000 Rand in that stage, and maybe you have exposure to 5,000 Rand. And that's how I started. And slowly, little bit by little bit, 1 year pass, 2 year pass, you lose money, you make some, you lose some, you make some, and you start growing. Then you start, basically looking for the other options, looking for the other instruments, looking for the other markets, and so on and so on. Okay. So over these 20 years, I went from those warrants over the futures. I was trading in one stage maize future and wheat future in South Africa on the on the SAFEX. Then I went to Forex, CFDs on the stocks, and more recently cryptocurrencies. So basically, as you grow old, you look for something else. We all, change, market changes, you change, so many unknowns that basically you should evaluate yourself and look for what is the easiest and most convenient for you, simply because when you're younger, you can sit 10 hours and watch 5-minute chart, but when you get older, and especially now with the lockdowns, kids being at school, you cannot really focus all day and watch for the very wait for your market or to move for 5 minutes, and simply you just look for something slower, more relaxed, and so on and so on.
Okay. So I just want to rewind back, because you saying you started with warrants. I think what I'm very interested in, I don't know if you'll remember this, but you basically heard your friend speaking in the office about trading. It caught your attention. You wanted to find out what it is. And he introduced you to some books initially. Do you remember what books those were for the people watching?
Okay, I can't remember. One was a book published by JSC with all the stocks, but after that I start reading about the books, and after that first course that I do with the SA warrants, that was probably those time span is about 6 months from when I knocked. And my thing is, when I start getting interested in something, I spend all my time trying to learn more. I guess that's come from engineering background, that you want, in our profession, there is no grades. black and white, something
Black and
works or
white.
something doesn't work, so very simple is, so if, and being, academic, I probably think that you should spend some time learning about things first before you do something. You put the money and then you lost all of your capital, especially on stock market. So the things that everybody recommends is Jesse Livermore, that's like Reminiscences of a Stock Operator. That's book number 1. Then books about market wizards. There is 3 or 4 stock market wizards, new market wizards, and there are 2 recently published, not recently, but let's say in the last 10 years published. There's so many books about trading. One of, I really, sometimes I ask myself, there are so many books, there are everything explained about trading. You can find millions of websites about trading, and still 80 to 90% of the people lose money investing on the market. So how is that possible? That's another question. But yeah, today even, you can really find all necessary information that you can find on the blogs of the people, and so on. So especially so many people are claiming that trading is more psychological, that technical analysis or fundamental analysis is up to the point, you can learn that, but after that comes to your psychology and how to trade and how to deal with the uncertainty in the market, which is the great, because we as a humans, we never deal with that kind of uncertainty like it is in market, because especially if you look Bitcoin's up 10% one day, 5% down next day, something that we don't experience anywhere else except there. Your job be steady, kind of, your property investments can be steady, but on the market, things are moving, like end of, when the corona started, just look the markets, everybody thought this is the end of stock markets, we are going to go to kind zero. Now markets are back to all-time high, and yeah, nobody would, nobody would predict that in March. Like nobody doesn't know what is going to happen next.
Okay, tell me, Igor, do you see yourself as a technical analyst or a fundamental analyst?
Technical, only technical, nothing else.
And I think maybe from the viewer's perspective, on our community, a lot of people are brand new. So maybe just explain to them, what the difference is between the technical and fundamental for those that maybe don't understand those terms.
Sure. Okay, fundamental analysis is mostly about shares. Basically, you wait for the company to publish their results, and based on those results, there are metrics that you look, and based on that metrics, you make your decision. So, for example, if you can buy shares with a price-earning ratio of about 4, 5, or 6, that's good. If the price-earning ratio is 20, that's, you will need about 20 years of your 20 years to get your capital back in the investment. So interest of about 5% if you look it very simple like that. And there is obviously millions of metrics. It's becoming more and more complex. People using those, you've got the companies that with the algos, the seconds after the results are published, their computers are already, dissect all that information and give them the basic what they should do. Right. On the other side, it's technical analysis, where you have the charts, and only based on those charts and the indicators, you make your decisions. So it's more like an art than the science. But as you grow and you start learning about those charts, learning about indicators, volume, many other things, candlesticks, you will find your own niche. There are millions of indicators, millions of ways to look at the charts, and so many times you can present the same charts to 3 people, and they will find, one will say it's going to go up, one is going to say it's going to go down, and third is going to go sideways. So basically, it's very, very personal, and it's very subjective way of looking at the markets. So.
Okay. So I just want to rewind once again back to your initial, because you started trading in the stock market, but you didn't start trading with shares. You started trading with warrants or derivatives.
Correct.
Right, because obviously they have leverage and they gave you more bang for your buck. Okay, so for someone that's very new to the stock market, I know some people watching this, we get a lot of people that say, I want to learn how to trade the stock market. And I always tell people that, look, what you need to understand is when you trade the stock market, you know, I understand you can trade with almost any amount, but it only really becomes feasible once you start trading. To me, this is my personal opinion. When you're trading, say, from 5,000 Rand upwards, then it starts becoming feasible. Unless, obviously, you're going down the route of warrants, which or derivatives or options, which are more complicated, but then they have the leverage, and it's a bit more, to me, it's a more advanced strategy. So for someone maybe that wants to get into trading shares and they've got limited capital, what advice would you have for that person? Just on shares. Let's put Forex and all of that aside for now.
Sure. Listen, first and most important advice is just learn or first study the markets. Don't put your money based on your friend, and that's how most of the people get involved. My friend take 10,000 Rand and turn them into 20, and then I will do the same. He's, you know, so I'm more clever than him, and so and then what happens, most of those guys will show you how they turn 10,000 into 20,000, but they will never tell you how they lost those 20,000 into trades. You know, market is something that we don't, humans through the history experience so many things, but something like market is very difficult, and very different from anything, that because of the uncertainty, and things change from minute to minute, from second to second. Not only that, mostly we are measured, when you go to work, you don't go and check, okay, I worked 2 hours today and I earn my 200 Rand for those 2 hours. On the markets, the moment you put the money on the market, you will see the immediate results of your action. Immediate. 10 seconds later, you will make money or you will lose money. If you start losing money, you will start stressing. If you start making money, you will be happy. That's completely human. So first, before you even put anything, because the chances, if you put something without knowing what you're doing, you're going to lose the money. That's 100%. There is no certainty about that. There's even the best traders in the world broke their or lost their accounts 2 or 3 times before they made it. And we are talking about billionaires today. We're not talking about small guys. So if you want, first study the markets. Read as much as you can about the markets. After that, leverage is very nice option if you know how to use it. I think that Albert Einstein, but I said something like I don't know, leverage, something about leverage. I can't even recall it anymore, but you can Google about that and you will get the quote. So what happens is, the leverage is great thing if you know how to use it, but 99% of the people go to the market, they use leverage of 1 to 100 and their account get wiped in one trade. So if you want to use leverage, be aware of both sides of the leverage. It's nice when you put 1,000 Rand and make 1,000 Rand, but when you put 1,000 Rand and a few minutes later you are gone out of your money, then it's very bad, and then you will have bad experience and you will think about, this is not going to work. You will cut yourself at the beginning of opportunity, that over time you will learn how to trade and make money. And especially if you look any other profession, you go to school to become anything, hairdresser or engineer or doctor or tennis player or soccer player, it takes you years to get to some level where you can make living out of it. People really think that I will join the market and 10 minutes later I will become a millionaire, so it doesn't work exactly like that.
Okay.
So first, and advice, please do not put the money without, properly studying what's happening on the market, what moves the market, how you should protect your capital, and that should really be your first option. Protect your capital. The bigger capital you have or you put on the market, the more you must be 100% sure that you know what you're going to do, because the chances that you're going to lose, most of it is great.
You're touching on something very, very important, Igor, because we give classes online on trading. And what we find is you speaking about protect your capital, especially if you have a big account. And maybe I'm wrong, or maybe I'm correct, and I think you'll tell me. But what I find is when people trade a very small account, they tend to over leverage the account, because
Absolutely.
when you don't have a lot of money to trade, you want to make more money. So what do you end up doing? You don't want to make a couple of cents every day. So if you've got a $300 account, the guy ends up then leveraging all of the money, because it's like, I can't make 3 cents a day. I need to make more money. Is that also your experience? Because I think when you have a lot
Absolutely.
of money on your account, you tend to be more prudent in general, because you know you've got too much money there to lose.
Yes, definitely. The problem is, then we come back to the previous statement. People come to the market without any knowledge, and they expecting that by next year they will be millionaires. Unfortunately, it doesn't work like that, and most of them will lose money. And in one stage, I was giving the courses for the market and investing or trading, whatever. And first, my question was, take the piece of paper and write down why you want to trade and why you came to this course. 99.99% of people said that they want to trade because it provides the freedom. So they can trade from anywhere in the world with their laptop and internet connection. And they don't realize that trading doesn't provide freedom at all. Actually, you have to sit in front of your PC for 8 hours a day to trade, especially shorter term, and then you must wake up earlier to make a plan for that day, and you must stay later to review your trades for that day. So it's far away from freedom that people think I'm sitting in the beach, my cocktail is here, and I make $1,000 by 2 clicks. Doesn't work like that. Otherwise, we would all be on the beaches. No one would be sitting in house right now. So basically, people join the market with the wrong reasons. They think that they are going to make money, and they see market something like, I'll do this for a year or two and I'm going to retire. It doesn't work like that, unfortunately. And I'm sorry if I'm breaking someone's dreams or something, but thinking about me starting in 2002, 2003, and thinking that I must make all the money by tomorrow, and now 20 years later or 18 years later, I'm still trading. I realize how stupid I was at the beginning, taking too much risks. And not only, even if you don't lose the money, that risk of seeing the market moving against you and your leverage, that kind of pressure or psychological destroys your thinking, clear thinking, and destroys your plans, and it's very difficult to act in your best interest when you are under that pressure. So you put 300 rand, and you want to make 300 rand by tomorrow. You shouldn't look at the monetary value. You should look at the percentage. That's the best. So if you put 300 rand, $300 doesn't matter, and you make 0.5% a day, and just do your calculation how much you will have after 3 or 5 years. Believe me, if you keep that stats, after 5 years you will be the probably richest man in the world or something like that, which is kind of, so, but people come to the market, they said, okay, I'll put 5,000 rand and I'll make 5,000 rand in 2 days, and then usually you lose the money. So instead of looking at the monetary value, look at the percentage, and look, this is a long term, look it as a marathon, not like a sprint.
Sure.
So people, the thing is, to survive, you need plan, and you must stick to that plan from the beginning. But that's like in any other business. Look, trading is a business. You don't go to you don't start a product or online shop or open the shop or cafe shop without some proper thinking and planning, because the entry to, let's say, open the coffee shop on the corner is much higher than on trading. On trading, you need your ID and your proof of address and few rand, and you will be trading tomorrow morning first thing.
Sure.
To open the shop, you must learn something about coffee or rent the place or buy the machine or buy the coffee and so on and so. So people and we are desperate for the money, especially in this world. And these times, people would look that as their, free exit from poverty or from being, getting some more money. And on the end, most of them, they finish losing everything.
Okay. While we still, because I want to move into the Forex section of our chat, but a lot of people recently, especially recently, I've seen a lot of people ask us on our groups, can you give us training on how to trade the Nasdaq or the DAX, which I believe are very, very risky instruments to trade. That's my opinion. But once again, because those instruments are so volatile, people see that, wow, today I can actually double my money on the Nasdaq, and that's why they end up trading that. So what is your view on trading those sorts of instruments?
Listen, for me, basically trading any instrument is okay. The only thing people must realize from the start, the only thing that you can control when you put the trade, the moment when you put your money in the risk, is the only one thing you can control, and that's how much you're going to lose. So stop loss, stop loss, stop loss. The property guy says location, 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 which according to me is wrong saying that, because the best property investment is the not locations or the different kind of locations, but in trading, stop loss. So you put 1,000 Rand on your trade, you say, if the trade goes wrong, I'll lose 20 Rand. That's max. 2%. That's whoever you ask, the guys who are trading for 20, 30, 50 years, they will tell you, the max that you should lose per one trade is 2% of your capital. And yes, that doesn't look, great. You're not going to double your money in 2 days' time, but you have chance to survive until you learn how to trade. And that's, for me, most important. So when you put the money, you don't know if the market is going to go down or if you're going to make 30%, 5%, or you lose. But the moment you put the money, you must know, and all of these platforms, they've got the stop loss that is set. You can put the trade, you put the stop loss immediately. If market hits that stop loss, you should know that your idea was not working. Doesn't necessarily mean it was bad idea, but it was not working as you planned. Most of the people come to the market, as you said, they want to trade Nasdaq to double the money, and they finish losing the money because they don't have the stop loss. They don't know how to stop markets, And if you go and read, there were so many researchers saying that people tend to cut their winners short and let their losers running, because when you have the winner, you said, oh, okay, I made some money, let's pick it up before it goes. But when you have the loser and market goes, you always hoping that it's going to turn and you're going to break even, or so and so. And even the worst thing is to double down, and then you basically destroy your account even faster than, so whoever starts, if you're trading without stop loss, chances of you getting killed is enormous. You are almost certainly going to break you're going to destroy your account.
Okay, I think you're touching on something very important. I think it comes down to one word, and that word is called greed. And once again, it's to do with the psychology.
Absolutely.
Even one of my business partners is always talking about the psychology of trading. And I think once you understand, understanding the technicals and how to trade, I think that's actually the easy part. I think the difficult part is controlling your emotions when you trade.
Yeah, and not only that, that's definitely controlling, or not really controlling. There is now, I read a lot about psychology. You cannot really control your emotions. You should use your emotions as information, because people are basically, most decisions that or all decisions that we make are emotional, and I can give you a million examples. You go to the shop and you know that you cannot afford to buy new Samsung S20, but you buy it, and we are making most decisions emotionally, not logically. But again, emotions are their information. And basically recently, for a year or two, I don't even read about technical analysis. I just following mostly people who are psychologists, involved in trading, like Dr. Brett Steenbarger or
Right.
Dr. Dennis Schul or so. So you read what they are saying. So they're using your emotions as information. So, and if you start writing down, you will recognize some patterns repeating over and over again. And for example, in my case, I found myself when I basic two emotions that I recognize. For example, when a market goes into my favor and I said, great, this is going to be the killer, you know, that's about the tipping point of the market. At exactly the same point, market turns and comes back. And that I found writing down on the paper. So whenever you trade, you should have the blank piece of paper and write down next to it, okay, I'm feeling like a stomach cramping, or I thinking about this being the best trade ever in my life, or thinking to sell this position without proper plan, you know. So you put those, all that happens to you, all that you think about it, and put, you know, maybe put them in the afternoon after trading is finished, you put what happened in that point in time on the chart. And then after few iteration, you will find what those emotions are going to tell you. Basically, emotions are information for us because we are humans. We live for 20, 30, 40, 50, 60 years, and all those emotions were built into our subconscious that you cannot really, if you don't look for them, they will you know, they will happen and you don't know why they happened. But if you start following them and telling and making notes what those emotions are telling you, very quickly you will find the pattern in those as well, like you find the patterns on the charts.
Igor, your information is really amazing. I think people that are going to be watching this interview, I did a post on Facebook prior to doing this, and I said to people, if you could ask an experienced 20-year trader anything, what would you ask him? And some people, I think there were people asking, you know, what's the best strategy? And I think that's what people want all the time. It's the strategy. What's the best strategy? And a lot of guys come out there selling these courses. I've got the latest, greatest strategy. It's better than the one that was used 20 years ago. And to me, I think that's just a lot of money-making schemes. Because from what I'm gathering from our discussion, I think it's what most experienced traders are saying. Your success in trading is maybe 80% psychological, 20% technical. Do you agree with
even more into psychology and less? You see, when I start trading, you put the charts, or anyone, and then you put that indicator, and then that indicator doesn't work. Then you put the next one, then you put the next. Then you go to Trading View, that place where they got the charts, and you open some charts, you can't see anything. There's so many lines of that charts that you really start, you know, you're getting motion sickness from those charts. My chart is basically just a price these days, just the candlesticks, and that's it. All these indicators are basically derivatives from the price. So they don't tell you anything in advance. They tell you something happened in the past. And basically the simple chart as, you know, as possible, no cluttering, no nothing. And then you will start finding your way. How I trade, there are millions of people, traders out there, and many of them make money, and probably no two traders using the same methodology. And if you look in those Stock Market Wizards book or Market Wizards, those guys are billionaires. They made money on every single of them, made money differently. Some were fundamental, some were technical, some traded Forex, some traded commodities, some traded shares. So that shows you that basically money can be on the market can be made in many different ways. But what is common for those guys is that they know how to protect their capital, and they wait for the proper trades to make money. And if you read anywhere, and the most people says, and that's that Pareto rule, that 80% of the trades make you 20% of the money, while 20% of the trades make you 80%. So what happens with the most beginners, you start, you make small money, lost small money, make small money, lost small money, make small money, lost small money. They said, okay, this my strategy doesn't work, I change it. You change it, and then you just looked after, and then the big winner was there. People are not patient enough to wait, and we're coming back to what we said just now. People want to make money today, they want to double accounts. Doesn't work in any field. Maybe playing lottery or lotto, you see the now Powerball, I've got FNB sending me on my app. Play lotto, it's 200 million rand or whatever it is. You said, come on, guys, your chances of winning that is very small. So only there, even in the business, even in the sport, anything, you spend years before you start making money. Years.
Sure.
Why trading would be different?
And I'm loving what you're saying. I read a book. It's called Outliers, and then there's another one called Talent is Overrated. And they say,
yeah, Malcolm Gladwell.
Yes, they say that mastery is something that takes 10,000 hours, which, if you work it out, is about 10 years. And I think what you're saying is exactly the same thing. Most people get in, they think and I think it's because of social media, especially Instagram, where we led to believe that success in the markets can come overnight, and it's microwave results. Because you see the guy driving a Ferrari on Instagram, you're like, oh, trading can make me rich overnight. But it's the same concept like everything else. It's going to take many, many, many years to get good at it.
And most of those guys driving Ferraris are basically selling the courses or selling the membership to their clubs and so and so. And that's their marketing, most probably they're not even making money trading, or they never trade, and there are millions of examples like that. And it's with trading after 20 years, for me, it's like, for I don't know, once you get into trading and you start making money, it's not about money anymore. And it's probably in sport as well. Those guys playing, I come from Serbia, Novak Djokovic is the best player in the world, tennis player right now, and Federer and Nadal, and those guys are not playing for the money. They've got money for next 10 generation. They are playing for the challenge. They are playing to be better. They are playing to improve. They are playing to get some more. They don't play for the money. In trading is the same, and in the business, the moment you start thinking about how much money I'm going to from this new business venture, your chances to make it are slim. Not big. When you think, okay, how I'm going to be better from this, or help some people with this new business challenge, or how I'm going to improve life of somebody, me, myself, my family, my friends, people around the world, then the money will start pouring. If you come into, I never, when I invest in property, in something different first time, I bought a flat and I didn't think, in 5 years I'm going to sell this flat, and I was thinking long term, and I was thinking how to people, they are suffering, because my first flat was in Sunnyside, Pretoria, like a, it's like a city center, old city center, and people come to again and again and again, come to the trading with the wrong ideas and with the wrong, and those guys on the Instagram, on the Twitter, on the Facebook, showing Ferraris, flying with the private jets. And I had a guy who was South African guy. He had probably 5-6 years ago, Forex membership. You pay, I don't know, X amount of rand, and he sends you the signal, and he sends you, it's always showing, their account. Okay, I bought there and I sell there. And I told him, okay, let's show us when you buy, don't show us like 3 days later, I bought that and I sold that. So what is the point? If you want to help the people, and I don't go under it, I made $1 million and you're stupid enough, and I will show you how to make the money if you pay me 5,000 rand a month or something ridiculous like that. So there are many sharks. I really think that trading is the industry where most people are basically lying, cheating, and trying to sell their products without having any background. And to be honest, if you make enough money, trading, and enough is different for anybody. For somebody it's 1,000 rand a day, for somebody it's 100,000 rand a day. Why would you bother with people asking you question about how I trade this or where I entered that, or having 100 subscribers, sending 100 emails, writing those things? Why? If the money is the a motive, So
Sure.
most of those guys, I really never ever found any membership that is really worthwhile, and yeah, just before you join something, and sorry if I'm stepping on your toes, but if, for many, all information to make it out there, and you could just sit, learn, and do it yourself.
Okay. I think what I want to just touch on very quickly is, what is your view in terms of mentorship? Did you get any specific mentorship? I know you went on courses, which I believe is important. If people want to learn how to trade, they must spend money on education. But what is your view also on having mentorship?
That's great thing right now. In the beginning, when I started trading, it was not so available because internet was not even remotely close like it is today. Today you have Skype, you have this Zoom meeting. We can sit here and somebody can mentor you from United States. In those stage, it was just the websites and email, and it was more difficult to do it. But mentorship, but if you have the proper mentor, it's a great thing. And especially because that's the way how humans learn over the history studied. You go to school, your teacher is your mentor. You go to high school, your professors are your mentor. University, somebody look at your work and correct your work and points you to the right direction. In trading, you sit in your home, it's a chart, you've got those 10 guys saying market goes down, those 10 guys saying market goes up, those 10 guys saying those 20 guys doesn't have a clue what they're talking. And the more you look at the social media, the more confused you are. And there is nobody to point you to where to go, So say, okay, this you did right, this you did wrong. You must work on this instead of working on that. This field, you're very good, but this is where you should make your improvements to be better. Okay, so it's a great thing. The different thing is how to find a good mentor, and especially in this field. You can, everybody can cheat and everybody can lie. And if you go to sport, okay, this guy coached that guy, and he probably must be good coach. In trading, it's a bit different. You don't see the real results of your teachers or mentors. But if you find a mentor, and there is so many places in United States, here it's not that much, but here it's really, our industry in South Africa is very small for those kind of things. In United States, you've got those proprietary companies where they put you in the training and they train you, and you sit there and you must write report. You start the trading very small. And and then you must write report every day after each session, why you do this, why you do that. And then you go with a bit more senior guy. And that's how the companies are working anyway in the world, even if you sell insurance. So, you will have somebody who will look to, after you finish studies or you come to work in the company, somebody, and probably that's your experience, you worked in the bank. So they don't give you money now and okay, go. There is somebody who is overlook you, what you're doing for first 6 months, 3 months. There is 3 months probation period. In trading, it's not like that. You sit and you trade and that's it. You don't, you're not responsible to anybody above you. You're responsible only to yourself. And then we tried to be a little bit, reckless in that situation before.
Sure.
Man.
Sure.
So yeah, mentorship is great thing, but how to find a good mentor, that's completely different story. And, to be honest, I don't have answer for that one.
Okay.
It's
okay. Let's move on to, you moved from trading the stock market, then you moved, and I know we've touched on because trading, I mean, trading is trading. You're just crossing over with certain information.
Correct.
But what made you move over from trading the stock market to basically trading Forex?
Good question. To be honest, I really don't have the exact answer. This was the situation. I just probably wanted to try something different. Markets were trading 24 hours. You could probably set up your stop losses and profit targets automatically on MetaTrader. Then just wanted to trade. Maybe one of the idea was to move myself from being too dependent on the rand. And so on. So it was not really one thing. I said this happened and I decided. So basically, as you grow older, you want to try something different. You maybe think this is not right. You want to grow, let's say, a little bit. Forex market is a massive market, much bigger than South Africa and so on. So that's how I moved. And then basically you just apply the same thing, same principle. Market is a market. You know, you've got, especially as a technical analyst, you look at the chart, you put your stop loss, you put the target profits, and you go from there on. On most of these new platforms, you can even set up those automatically. So people will really, you know, you don't have even to sit there and watch all day. I was looking to move more. Probably the main idea was to move to the longer time frames, you know. So instead of looking on 5 minutes or 15-minute chart, I started looking in hourly and 4-hourly chart and so on. So I just wanted, probably that's the what made me change, is that have a little bit more free time and being more relaxed trading than, you know, when you trade 4-hour chart, you come every 4 hours, you check what's happening, and then you make decision. When you look 5-minute chart, you basically sit there all day in front of your computer.
Okay. So you're obviously saying that when people are a bit younger and you might have that. Look, I think the thing is most people don't have the time, to be honest, to be sitting and watching the charts all the time. A lot of people that come into this market are people working full-time jobs. And I remember a few years ago, I was working with a guy. He used to sit on the other side of me in one of my, I was at the bank. And this guy had just started trading Forex. And he was the most chilled guy that you could ever know on the floor. I mean, he was so relaxed. All of a sudden, I saw this guy walking around with his phone, checking his phone every 2 minutes. And I was like, bro, what's going on? He's like, oh, I started trading Forex. And I'm like, man, do you really think you can? Because I was noticing this movement of his for about 2 weeks. And I asked him, do you really think you can do this on an ongoing basis? Because I've been trading the stock market for a very long time as well, but I'm not a day trader. I buy a share and I might keep that share for 2 years or 3 years before I even think of selling it. Whereas other people are obviously coming in and they want to make those quick profits because they want to leave their jobs and they want to replace their income. But the truth is most people can't be day traders. They can't be those 1 minute traders.
No, the problem is that, again, social media, Forex brokers, all those guys, you know, they kind of not force, but with their marketing, they show you that you can do it. Those guys showing the Ferraris and Lamborghinis and private jets. So many people get into idea that they will make trading, that it's easier to trade on the shorter term than on the longer term, and that's fundamentally wrong, you know, for many reasons. First, not many people can make decisions every 5 minutes or every 10 minutes, not many. You must think fast and you must be focused 110%. But if you look, as you said, 2-3 years, then small movement doesn't mean a lot to you. If you even open these days Bitcoin chart, if you open 15-minute Bitcoin charts, you will see bars like that. If you switch off to 6 hours or 12 hours, nothing happened on those charts because, you know, movement is, you know, and people think that they are going to make money fast on the time frame. Yes, they are going to make money faster, but they are going to lose money even faster than, you know, and it's pros and cons for everything. The people, again, I think, come to the market with the wrong ideas. Okay. That's my basic, and that's why they lose. They think, as you said, I'm going to replace my income. I'm sick and tired of this job. I'm going to start trading. In 2 years or 3 years, I'm going to retire. I'm going to tell my boss to, whatever. And that's simple wrong reason. You would not go study medicine because you're sick and tired of studying law or something like that. You are attracted, or you're not going to start playing golf because you didn't play nice soccer. You in most of other fields you attracted because of you liked something.
Sure.
Your father was doctor, or your brother was playing soccer or something like that, and you play and you're good and you train. In trading, it's I'm going to start trading to replace my income in 2 years because I hate my job. That's 90. And if you see when the corona we get locked down, I don't know, the number of the new accounts open in the Forex broker tripled in a month time, because people now sit at home. They probably all their life they wanted to try trading, and now there is opportunity. I'm at home, I've got some money, and probably my salary is going to be cut. I'm going maybe to lose the job. Let's do this trading and let's, and that's exactly 100% sure that that's the wrong reason to start trading.
Okay.
That no doubt about that.
Okay. And then in terms of trading Forex, obviously, recently I saw one of the local, I think it's a local broker, or their local license was retracted. With your trading, do you tend to use some local brokers, or do you work with international brokers?
You see, I was involved, if you remember, a few years ago, when the Swiss bank, Reserve Bank, had a peg on the Euro Swiss franc. It was 1.2. And then I was trading with the broker in Europe. I didn't even touch that Swiss Euro pair. What happened one morning, actually it was afternoon, I come back, I was out, I come back and all my positions were closed. And I start wondering what happened. And then I see on the Twitter that my broker is going down because they were too exposed to that pair. People lost a lot of money and they couldn't pay it off. Luckily, most of those brokers were registered, and my broker was registered in UK with the Financial Service Board, and they were guaranteed about £60,000 in that stage that will pay back. And I got that money, but it took 9 months before I got money back. And probably guys with much bigger accounts than mine in that stage, that could probably lost a lot of money, because if they gave you £60,000 and you have £100,000, doesn't matter, which is not that big account. In any case, you lost a lot of money on that specific, even without being trading Swiss pair. But it's always a problem. It's always a problem to with the Forex brokers, that you find the good, reliable guys and do proper review before you start trading. And then they must have all financials being registered and being regulated. In a few years back, I don't even know what happens. We had those binary options where you basically go 0-1, I don't see any advertisement about those guys anymore. Probably they're all gone out of the business, or they just made the money and they ran away. So
they're still there, just so you know, they're still there. The binary options are still very active. A lot of people pitch us on binary options. Yes. A lot of people lose money there.
Yeah, obviously that's why they are there. They make money, because most of these Forex brokers, they don't really. Theoretically, Forex brokers, if you buy X amount of, rand or dollars or euros, they should go to the market and hedge their position. What they are doing, basically they've got a list. So they've got 10,000 clients, 5,000 clients are short euro, 5,000 clients are long euro. And then they will basically base that and make their decision, their algorithms, do they have to buy or not. And on top of that, they know that something is, my phone is ringing, doesn't matter. Most of those clients are basically, they know that they're going to lose the money, so they bet against you. And, so theoretically, they are, they are not doing the things that they should do, and that's why they run into the problems.
Okay.
But first, if you before you choose the market or the forex book, it doesn't really matter. You can put the money in UK, and in any case, even if it's local, I see there is FXCM and few other guys opening, like a big forex brokers opening offices in Johannesburg or Cape Town. And to be honest, it's the same. You can transfer money from your credit card to London or to wherever you want. It's your personal preferences. But please, I was always trading overseas, but please do your due diligence before and make sure that you choose the proper broker that is financially regulated, and that you don't finish without losing your money without no reason.
Okay. Something just came to my mind. Tell me, when you got into trading, or even forex trading for that matter, did you start with demo accounts, or did you just go live one time? You sound like a guy that just goes live.
Yes, I went live because there were no demo accounts in that
Okay.
stage, and
Okay.
there are both pros and cons for both. But demo is great, great thing, but unfortunately is a bit different, and you will not make that step, and it's not going to be exactly the same. So I would probably recommend starting with demo, not too long, just to get feeling about everything, and then putting the money. So if you have, again, you must come with the idea that I want to trade 20 years from now, not I will become millionaire tomorrow. Those two different principles. So if you come with a mindset of I will trade in 20 years time, and you said I want to put 5,000 rand now, you will say, okay, I have 5,000 rand, I'll put 1,000 rand now, and I will play with that money to see how it happens. If I lose them, okay, I will not go to go broke. Then after losing that 1,000 rand, you put another 1,000, because it's going to take time. Most of the people and most literature says 2 to 3 years. So the longer you have capital, the bigger chances is going for you to learn how to do it and to be successful. If you have put 5,000 rand and you leverage 1 to 100, 3 days later your account is gone. What did you do? What did you learn? You could go to casino as well. That's exactly the same principle. You could go to casino and you would probably have bigger chance of winning something there than on the market. Because remember, market is, you're competing against banks. Let's start from those guys, which they can, buy any computers in the world. They can have, they are buying or employing PhD in mathematics, in statistics, you cannot compete against those guys. Luckily, there is a market that we can compete, and because they are not going to trade 2,000 rand accounts. When they move money, it's 2 billion rand money that that is transferred. So there is place for retail small guys like we are. But again, that will come, ability to compete against them and finding your small niche where you're good. And to be honest, on market, you need one or two trading patterns, technical analysis, 1 or 2 markets, and you can have proper, decent, living out of that. You don't have to be like a bank where you got 100 billion rand to invest this years, and you must put 5% here and 3% there, and you must buy these stocks, and you must buy that. So because they are heavily regulated, we are not. And that's where give us opportunity to make money. So it's big, different ball game. But again, you should look yourself, like with anything else. You build your corporate career, you start as a clerk and you climb until you become manager or something, and when you really start making money. So basically 10 years of or 20 years of climbing the stairs to make living in 20 years that you can retire. Look at it that way in trading,
Very long term. I like that. And Igor, tell me, in terms of your trading strategy and your risk management, we typically teach guys to never risk more than, especially new guys, never risk more than 1% of your capital, so that you can protect yourself. What is your risk management strategy? Obviously you're more experienced, so maybe let's start with what your feeling is on that, and then I want to compare to now as an experienced person, because some guys, they don't even think that I'm less experienced. They just go very aggressive all at once. Whereas you might find even an experienced trader is following very conservative strategy in terms of his trading.
You know, the older I get, the appetite for risk is smaller, you know. So the 1%, I started with probably 3-4% and dropped to 2%. Now 1%, and that's of the money that is on the market on that specific account. I've got many other things. So in the global perspective, that one loss in my portfolio is negligible comparing with big picture. For somebody who scraped 5,000 rand or borrow from the friend and risk 5% to 10%, for him it's 10% of his net asset value. You know, in my case, it's very small comparing to anything, but never, ever, ever above 2%. Nobody should start. The smaller, the better. And again, I repeating this for I don't know how many times. Look this as a long-term business proposal, not as a, you know, Facebook was established when 20 years ago, even it became famous, like 10 years ago. How many years took Apple to become what it is, or Microsoft, or any of those companies? Why you think you are more clever or you know, than Steve Jobs or Mark Zuckerberg or whoever, you know? So it takes time to become, you know, there is saying it takes 20 years to become overnight success, you know. So look at it from that way. And it's great, you know, as I had many years ago, I had a trading coach. It's actually a psychologist, United States guys, Dr. Andrew Meneke. I don't think so it's doing it anymore, but he said that many people says that he's saying that trading is like a magnifying glass of yourself. So all things, fears, greed, everything that is, you know, bad in you, or the not bad, but let's say maybe phrase it wrongly, but the things that you should eliminate, when you put money on the trading, they will be 100 times magnified on the market. Good things will be just pushed into the small corner. So it's he's put it like trading is like a magnifying glass of your emotions and of your bad feelings, or feelings that are pushing you into the wrong direction, and so and so. And it's absolutely agree with that, you know. Greed, fear, awesome. Regret, many of those things.
Okay, so Igor, so from Forex trading, how long were you trading Forex before you made the switch over to cryptocurrency?
Listen, I still have the Forex account and I'm still trading it. The next step is cryptocurrencies, because I move it because I had a mining rig. I was mining Bitcoins 2000 and maybe 3-4 years back. And that's how I get involved, because in that stage you could make quite decent amount of, with the normal PC, with the graphical GPUs, graphic cards, you could make quite a few Bitcoins. So from there on, I start accumulating Bitcoins. And the idea is that, as we spoke the other night, it's Bitcoin to me is future. That's my opinion. Again, I don't think so that our kids will know the money that as we know it now, it's going to move, you know, because really financial industry is the same. That it didn't improve in any way for hundreds of years. And comparing with what I'm doing in electronic engineering, it's like, which changes, like 20 years ago, we didn't have cell phones. 30 years ago, PC on every desk was like a dream, you know. Now you've got 10 PCs around you, you've got tablet, you've got laptop, you've got PC, you've got cell phone, all of those things. So financial industry is the same, you know, from the invention of the money and then removing money from the gold peg, like we had when the Nixon, I think, did it. Nothing really changed dramatically. And if you start looking, all of these guys from the establishment in United States are against Bitcoin, and they see that as the big enemy of their well-being, because they made all the money, you know, old way, and look how much money was printed in just from the beginning of COVID-19 all around the world. Even our South African government giving billions of whatever of money out. Question is, that will cause inflation in some point sooner or later, and you want to go through that. And I really think that cryptos, it's still early days, you know, and I've got part of my money sits in the Bitcoins that it's going to stay there for another 10, 15 years. You know, I don't even want to know what's going to happen. I don't even check what's happening with those money, because, you know, imagine that we're using paper money as we know it for hundreds of years, and we are like 10 years in the Bitcoin or cryptocurrencies. Again, that's my personal opinion. Bitcoin can go tomorrow to zero, to $100,000. I don't know, and I don't predict, you know. But sometimes, you know, based on your ideas and your thinking, you should invest something and believe in something that you really think it's, you know. I'm coming from technical background, and I read a lot about blockchain, I read about those things. So I like science, I like new technologies, I like new things happening and improving our lives, you know. So that's maybe why and then I start trading for cryptos. So basically part of my money goes every month, or whenever I have a little bit extra, buy a little bit of Bitcoins and put it in the safe place where I'm not going to touch it. And then a little bit of money goes to the trading. But like last month or two, Bitcoin is just bouncing between two levels. So, and I'm trend following trader, so I don't like getting involved in those range bounds. So I'm waiting for the breakout to happen and then to put a little bit more into leverage account for Bitcoin and other cryptos.
And Tom, in terms of the trading, because you're also saying, because obviously you're keeping crypto somewhere in one of your accounts, but in terms of the trading, a lot of people don't know how to trade Bitcoin, which exchanges to use. You know, what do you use? Not that to say it's the only ones, obviously, but just to give our viewers some knowledge.
I'm using Bitfinex. I use them from I don't know, from the beginning. They are one of the biggest 5, 6, 7 in the world. Again, there are so many else, so you just have to be careful. And again, if I kind of lose those Bitcoins, again, it's not the end of the world. If somebody puts all his money to account and put it and he lost it, again, it's completely different story for each of us, you know. So everybody must be cautious what to do. So do investigation in the beginning. The same like, but with anything, even if when you go to buy your new Takis or new jersey, you go and do some investigation. Why would you put your money into some broker account that you don't have a clue who are they and what they're doing? So go check reviews. Whenever I want to do something, I first go and check reviews, see, you know, if people are complaining all around the world, you know, don't go there. Look for something like, you know, people are trusting and it's decent, and you know.
Okay. And then in terms of the cryptocurrency, what I'm also hearing, what you're saying, you know, it's not that you're basically saying, you know, if it goes up or down, I don't really care. But I think the underlying message there is, don't risk money that you can't afford to lose. I think that's the underlying message.
Absolutely, always, because, you know, it's going to putting some money that it's for your bread and butter tomorrow, and then you're losing it today. It's going to have devastating effect on you in many ways. First, you will probably come and say, this trading is for crooks. The brokers, you know, hit my stop loss, or banks run, or Fed said something, or Warren Buffett said something, or Trump tweeted something and I lost money. You will put that in back of your conscience, and you will never ever again try to trade. And it's opportunity that you will lose over long term. While if you come and put the money that is you don't really care about if that's an option for anybody in this world, that there is a money that you don't care. And then from there on, start learning and start, progressing and start making small steps. And then sooner or later, you will be in the position to make it. Then it's completely different. And don't get me wrong, people think that people see you, I tried trading and I didn't make it and I am loser or something. Trading is not for everybody. Sport is not for everybody. Being doctor is not for everybody. Being like a banker is not for everybody. Again, we are bombarded with all of these promos and people showing you again Ferraris, yachts, and we made it. So we got bombarded with all of this advertisement that trading is for everybody and you can make money and you can become a billionaire with the trade. It's wrong. It's not. Very simple. We don't get bombarded with a University of Pretoria, go study actuary science or whatever, or study doctor and whatever. So it's, there is so much money for those companies, Forex brokers, that to bring the new meat to the market to be slaughtered, that they can spend money, on advertisement. So trading is not for everybody. It's not end of the world if you don't make it. Property investing is not for everybody. But there are many millions of ways to make money. So to be honest, opening online shop, maybe you will find yourself these drop shipping things or something. Don't get yourself, if you try to trade and you lose money and you hold yourself as a loser all your life. It's simply wrong.
Okay.
Not all things are suitable for every one of us. It's very simple.
Great.
We don't like same things. We don't wear same shoes. We don't drive the same cars. We don't go for same vacations. We don't go to same clubs. We don't drink the same things. Exactly. So why you think people would think that trading is for everybody? It's not. Very simple.
I like that. I like that. Thank you for speaking from the heart, because I think that that shows, and the fact that you've got experience in so many other fields, and now I want to get on to something that's very that I'm very passionate about, which is property investing. Up until our discussion the other night, I didn't really know that you were also a property investor. I thought we're only going to be speaking about trading, Forex and the stock exchange and cryptocurrency. But I do believe that you should be diversified, which I think is what you're doing, because obviously property investing is a bit more passive than, trading the markets.
Absolutely.
So if you can maybe, and, our call is going a little bit longer than it would normally go, but it's valuable information. I don't think it will be much longer. If you can just touch on how you got involved in property, where you started, and a lot of people obviously don't have a lot of money when it comes to property investing, so if you can just touch on, and I'm sure even you didn't have a lot of capital available when you started,
definitely.
But you told me the other day you've got about 50 properties now.
Correct.
So if you can just take us through that journey very quickly and, your experiences.
Actually, when I came to South Africa, as I mentioned a few times, I came from communist country, so I didn't know anything about investing, any kind of investing. And somehow I stumbled across Rich Dad Poor Dad book, and that opened my mind. Before that, to be honest, I was looking to study for MBA because I've got master degree in electronic engineer. I wanted to go for MBA to climb the corporate ladder, and then somehow I ran into Rich Dad Poor Dad, and that opened my mind completely, or switched my mind. And in meantime, I met some older people from ex-Yugoslavia, and I met the older gentleman who came here 1970 something. He's got 4 grades of primary school, and he's got portfolio of, now he's got shopping malls and buildings that he rents to the government because he's now massive. Right. And I was asking myself, okay, I finished all that schools, and he managed so many properties with 4 grades of school. Why he can do it and I can't do it? And then I start looking, and obviously, as you said, you don't have money, and you cannot afford to buy property and put 2,000-3,000 rand every month just to keep it running. So if by chance I start looking at the properties in Sunnyside, and I see that there you can buy the property that can start, you pay the bond, you pay the levy, and there is a little bit of extra every month. So it's cash positive from the day number one. And I went to buy one, and being white guy coming from the, from the different country, my friends say, are you fucking crazy? They're going to kill you there. They're going to rape your wife. We went there first time, me and my wife. We didn't have kids. We had small Toyota Taz Conquest in that stage. We pack it, and we didn't have anything in the pockets, one cell phone, 10 rand, because we were biased. You go and you listen the story. That's what's happening there. Today, differently, I'm going with my kids there to Sunnyside. That you realize, and luckily, I all my life I relied lots of my thinking rather than listening to what other people says. I listen, but then you think, okay, I'm going to go there. It's impossible that all these people are killers or criminals or rapers. And then you go and see people living normal life. Those are people like me and you trying to make living, struggling to pay the credit cards and bonds to buy the food. And that's how we get into the first property, and then first, second, third, fourth, and then during those years of 2008 when the interest rate went up after financial crisis, I basically collected some capital, and then I bought the most of my portfolio because the properties were going at that cheap rate. So basically from there on we started growing quite dramatically, and last 4 or 5 years I didn't buy anything, so basically just sitting now and enjoying the passive income that it comes, looking for the great deals. And as we spoke the other night, I'm not going to jump into something that just for the reason to have the property. I would rather wait for something that it looks very attractive and then go from there.
Okay. And your properties, now obviously you started very similar to me. You started with single units. And like you're telling me the other night, you ended up having, I don't know, 7 units, but there was 100 units in the complex, which is a bit of a problem because the body corporate, as you said in our call, if the body corporate starts having problems, it affects you. So I assume now your strategy is different. I think you told me you sold those assets, and now you try and control the entire building because you move more into bigger blocks of flats now.
Correct. But obviously the problem for somebody who starts, even if you go to the bank and tell them I've got this great deal, they will ask you how many other properties did you ever rent the properties. You will say no and say, come on, get lost. Nobody will give you a loan for 100 flat building if you never ever in your life you rented even nothing. So it's again steps, one step at a time. You start small and then you start growing, and then in one stage you outgrow investment in the singles flats or something, and then you go for the bit bigger. That's how I see it. Maybe I'm wrong, but that's my experience that worked for me. Maybe if you have, again, it comes to maybe even to the mentorship, that somebody will explain you how to do this and how to do that and what to do and so and so. So it's again a personal thing to everybody. That's how I found it. Now I would not really go and buy the property in the building, high-rise building, where you've got another 20 owners or 30 owners or 50 owners, and especially in the smaller buildings, 30 flats, easily 5 guys cannot pay the levy, and then it's massive percentage-wise is massive, fall out of the people, if it's 100 flats building again. And again, people will tell you, you can't find those buildings or you can't find those flats with the cash positive. There are many of them. Don't be, but don't look at most of people live in the area and then think that investment is buying flat next door to them to be investment. That's not real investment. It's, again, coming from engineering experience, I judge the investment only according to the numbers, and that location that people are saying, it's completely nonsense. Numbers. That's what I would like to put. If you have to pay 5,000 rand every month extra to keep your investment going, that's not investment. That's wasting money and relying on capital growth. Capital growth comes, but you don't know when. That's the difference. When you invest for the cash positive, you have the cash positive investment every day, and the capital growth will come sooner or later, and you don't really care. For me, doesn't really matter how much my properties cost now because they bring money every month. So I don't plan to sell them. You will be really interested in selling only or in the value of the property only when you sell.
Sure. And tell me, in terms of the property side, were there any courses, or were you mostly reading books? I didn't go for any
Uh,
courses. I was mostly reading books.
Neither, yeah. That Dolph de Ross was the name.
Yes.
Yeah, in some stage we had that trio guys who were basically, yeah, Kurt Kutsiev. I see he's now in cryptocurrencies as well, but he's one of these guys doing marketing, you know. So, but not really. Very simple. Properties different from the stock market because it's longer term, and even if you make a mistake at the beginning over long term, probably can correct itself, you know. So books, you know, just put the number, it's cash.
Okay, got you. Sorry, I just lost you there for a
Sure,
moment,
sure,
Igor.
no problem, no problem.
Okay, so it and ironically, I read the same book, Dolph de Rose. It was called Real Estate Riches. I read that
Yes,
that book
correct.
as well. I love that book. Okay, no, that's awesome, Igor. I think just maybe to sort of conclude, we've had an amazing call. This is one of the longer ones I've done, but I think it's a very valuable information for people, and I think we could probably go even another hour. There's so many other questions I could ask you, but I know you're also busy. But how I'd like to split this, normally I ask, the person I'm interviewing, I ask, if you could give people 3 to 5 tips on succeeding in trading. In your case, I'm going to ask you for 3 tips in succeeding in trading, your personal, professional opinion, but then also the
Okay,
same on the property side because they're a
sure.
bit different. So you're going to have 6, unfortunately, because you're so
Okay.
clever.
No, thank you. Okay, on trading, first, stop loss number 1. Whenever you put trade, you must have stop loss in place, number 1. Number 2, look, this is a long-term thing, not as a short-term. Think about how much money you can make over next 20 years rather than next 20 minutes. That's a big difference.
Sure.
And third one, yeah, give yourself time to succeed. Don't rush into trading and making. Don't believe that you're going to make $1 million tomorrow. It's not going to happen.
Sure.
On the property, again, property is longer term in any case. So look at it longer term rather than the short term. Look for the passive income. So every month you should have the income coming from your properties. And yeah, that's how you should really buy the properties at the first place, find the cash positive properties. And as the time goes, the levy will, your rent will go up, the bond will drop the interest rate will drop. So basically your cash positive will run up higher and higher. And probably number 3, don't let your real estate broker, or not broker, but the people selling the property
agent.
tell you agent, what is the good investment. They don't have the clue what is the good investment because they are selling property, they're not investors. So look for the advice from the investors, not from the estate agents.
Awesome stuff. Igor, I know whoever's watching this, they're probably going to come and hunt for you. They're going to look for you. They're going to be like, who's this guy? We need to get more information. I know you're very active on Twitter. Maybe if you want to give people, where they can find you.
It's Aussie Trader on Twitter, Aussie Trader on the Trading View if you want to see my charts. But really, I don't go that much anymore on the social media. I've got very small, a few people that I'm following where I think I really can extract information that I need and I love. And yeah, that's about it. So really, I'm not into this for any money. I give those advices completely for free. All my charts are for free. I don't have membership clubs. I don't have courses. I had a course in the past, but I realized that it takes too much time from me. So yeah, if you like my information, it's great. If you don't like, again, it's great. I don't have any financial gain in you following me on Twitter or something. Everything is for free.
Awesome, guys. So that was Igor. Please go and find him on Twitter. As you can hear, a lot of experience. And what I love about him is he's very similar to me. You know, people ask me, why are you involved in so many things? And I do believe, especially in the financial markets, the knowledge is transferable across platforms. You know, technical analysis is technical analysis on
Absolutely.
a stock market chart as it is on a Forex chart. So it's about getting good at the skill and giving yourself the time, like Igor says, and not to look at it as a short-term solution to your problems. Look at it for what it is. If it took you 10, 15 years to become a manager in the corporate world, it's probably going to take you 10 years to become a successful trader as well. So you've got to give yourself that time. Igor, thanks so much for all this
Thank
value.
you for having me.
I'm going to do all the edits on this video, and I can't wait to release it. I'll let you know as well when I release the video. But I'm loving this. I think people are going to devour this information, and I think they're going to find it extremely valuable. Thanks so much.
Thank you very much. Thank you for having me. I hope it helps some soul to make some money.
Good stuff.
Thank you.
Stuff.